stronger evidence than the wealth ranking, I would say.
Agreed.
But Dubai's wealth boom did not mean every part of the property market had an easy quarter. The clearest takeaway from a report that was released this week by First Class Property Management on the short-term rental sector is that holiday home operators were squeezed from both sides. Fewer nights were booked while more homes were competing for guests. Citywide occupancy fell to 48% from 73.3% a year earlier, and active listings were still 10.2% higher.
Guests also waited much longer before committing. The typical booking came just 2 days before arrival, compared with 4 days last year. Those who did book stayed around slightly longer, so the market became more last minute and much harder for owners to plan around.
And the agency that did release this report has said that its own 630 home portfolio held 87% occupancy after shifting heavily towards monthly stays. Nearly 70% of its booked nights came from stays of 29 days or more. Now, that's not the whole market, but it's a useful example of how some operators have adapted during this time. So I asked Luis Santos, the company's co-founder and managing director, what changed and what owners should learn from it. Here's what he had to say.
The March disruption stopped tourist demand almost overnight, and occupancy across Dubai fell to 48% in Q2 from a 73% a year earlier. But demand didn't disappear, it moved. The engine right now is local. The UAE residents and business travelers leaving annual leases for flexible monthly rentals. And even though new handovers keep coming, the number of active listings is down 7% from January's peak. Recovery is real. Occupancy climbed from 40% in April to 54% in June, through months when it normally falls into summer. Ahead, a packed winter event season and government incentives already pulling visitors in.
So, Tala, without getting lost in property jargon, what does this report really tell an ordinary owner?
Q2 was shaped by a sudden regional shock, as we all know, so it shouldn't be treated as a permanent verdict on the market itself. I'm sure if this was any other quarter before this had happened, then the results would have been very different, probably similar to the previous year. There were more listings competing for fewer bookings, which meant that cutting prices alone couldn't really fix the problem. And, we've seen it in the data. Guests booked at the last minute, leaving owners with less certainty about the month ahead. And some operators found stability by targeting people who needed furnished homes for several weeks rather than a few nights. Yeah, I even myself know a few people who moved out of their apartments just to get a really fancy short-term rental instead because it was cheaper. But, we saw that the location still mattered. Downtown Dubai and Dubai Creek Harbour were still busier than DIFC and JBR apparently.
Okay, that's interesting. So how do we then explain this huge gap between the 48% market occupancy and 87% in the company's own portfolio?
The company shifted towards monthly stays, which accounted for more than half of its booked nights. Longer bookings filled the calendar and sort of reduced that reliance on tourists making last-minute decisions. The figures in the report covered a professionally managed portfolio of over 600 homes. So they're an example of one strategy, but definitely not a market-wide result. The trade-off is that longer stays can be steadier, but may earn less than peak nightly rates because, you have less flexibility with the pricing when it comes to that. But the quarter did reward owners and managers who changed the product quickly and sort of adapted to the needs of the market. But now I have a question for you, Tom. Is the bigger lesson here about short-term rentals or about how flexible a property business needs to be?
Well, the latter, to be honest. I think if you look at the easy passive Airbnb model, that does look much harder when bookings arrive only 2 days in advance. Owners now need to understand the full cost of cleaning, utilities, platform fees, empty nights and management, and the short-term nature of it makes all of those factors far more important. A strong citywide property story doesn't guarantee every rental model performs well in every quarter. But there's a useful Dubai contradiction here, and it's that the city can afford record numbers of wealthy residents while holiday homeowners still have a very difficult quarter. So this big structural growth does not remove the need to run the business properly.
Mm-hmm. Now, before we get into more details about our next segment, which is on Syria, there's a reason why we've covered Syria so extensively this week.